stocks could change quite dramatically based on what is announced. And Madhu Kela is in conversation with us. Madhu, you were making a point just before the markets opened about the way forward and what your thesis is. You want to complete that point?
Yeah. So the three numbers, according to me, watch for will be I'm now talking about purely from the government perspective, that what is the total gross revenue estimate which they are going to make. In my view, it should be close to 43.5 lakh to 44 lakh crore rupees. What is the total expenditure which they are going to make? It should be in the ballpark of 53 lakh crore rupees for next year. And the gross borrowing of around 16.3 lakh crores and net borrowing of around 11.7 to 11.8 lakh crore rupees. Now these are numbers which will give us indications about the overall market, about bond yields, about bank nifty, and the way forward. So I would say, as the budget starts to come, watch out for these numbers. This will kind of set up the tone. So let us say, suppose I'm just giving an example, like instead of 43.5 lakh crore, if the revenue assumption is 47 lakh crores, then we know some of the other taxes are coming, right? So this is how at least I look at the budget and I analyze it. But these are three key numbers: borrowing number, the gross revenue, and gross expenditure. And of course, the fiscal deficit which they speak in the beginning itself.
This is why we love to speak to you, Mr. Kela, because you're able to look at the story behind the numbers. And I think we'll have that perspective as well when we look at those numbers when the finance minister announces it. Having said that, and I just want to ask you about the context heading into the budget and, of course, the look forward into FY27 as well, which is that the earnings cycle has played out. We've seen half of it play out, right? So you might have gotten an indicator as to where things stand right now in terms of both the earnings picture and the valuation picture. In your opinion, there are pockets where a lot of people had previously said there was a challenge on the valuation side. Are you more comfortable with the setup heading into FY27? And are you out there looking very strategically to pick up more?
So I would say the earnings are, a lot of smaller companies' earnings have been very positive. If you look at company by company, the results have kind of also surprised on select pockets. Of course, select pockets, they continues to be challenging. So if I look back, when the market actually started to correct on the small and mid cap size, that was maybe 1.5 years back when the correction started. And we have been very vocal that the valuations are stretched. But now let us look at 1.5 years have passed. Lot of stocks have seen correction of 30, 40, 50%. So that's another kind of event which has happened. And thirdly, now we are starting to look at 2027-28 number. After 6 months, let's say from June onward, we'll start to talk 2027-28 number. So if I look at from that perspective, I think valuation selectively has become quite attractive. The other point is that there is so much. See, the biggest worry for me, even last year and even this year, is not this, but the flow of paper which has come in the market. So market kind of absorbed 5.5 lakh crore rupees of new paper which came in by way of new offerings, which came in by way of sellings from private equity guys, which came in by way of selling from promoters. I also expect this year also that number to be reasonably high, because we track the number of DRHPs which are being filed and waiting for market to hit is more than 200. And we have mother of all IPOs waiting this year, which will be NSE, which will literally have kind of 100% free float of such a large company. So we will have a lot of new paper which is coming in, which in my opinion will continue to put directly or indirectly pressure on the secondary market. So my overall thesis for the next few months is that there is going to be very little interest in the smaller names, because a lot of larger mutual funds and larger investors will be busy watching yeah, where they could where they could deploy a large capital, which will leave the smaller and mid cap segment kind of relatively neglected. And that is where I think the opportunity is coming, or rather will get more accelerated in months to come. And at least as far as I am concerned, that is one space which I am focusing on, making our list properly, doing our research to the next level. And if the market does present opportunity, then we'll press the button.
Mr. Kela, a theme that we've been discussing and we think will be big in the budget as well is how India can be protected from what is happening around the world. So a bigger focus on import minimization, self-reliance, making supply chains more indigenous. In that Atmanirbhar portfolio, and this is the question that I've been asking, where are the opportunities there? Have you started already looking at companies from that lens? That is this company going to benefit from government policy to make sure that we are secure, whether it's minerals, defense supply chains, or what you may have it?
Tamanna, we call it strategic autonomy, and this is one subject which has been very favorite to my heart, and we've been speaking about it for last 2 years. In fact, Singularity had a conference last year, and the whole emphasis was on strategic autonomy. And there are 8 or 10 sectors wherein we are still dependent a lot on imports. So I think government systematically has been working on it. Electronics was one sector, and you will see whether in budget or off budget. See, the beauty of this government has been they are not waiting for one big bang budget announcement. You just imagine if all the GST cut which was announced in the middle of the year was part of the budget, it would have been like a big bang budget, right? But it's like a budget happening through the year. So one thing is very, very clear is that they are all out to support Atmanirbhar Bharat. They are all out to support strategic autonomy on these sectors. So these sectors will continue to get government policy support, and it will get, in my understanding, more and more accelerated. Let's say for something like medical equipment, it's a large business, around $12 billion, a domestic consumption. It's still 75% is imported, right? So the sectors like this will clearly see how we can manufacture more and more in India, how the government can support some of these sectors, and how we can become self-reliant. And critical mineral will again fall into the same category. So Tamanna, we have identified 10 subsectors within strategic autonomy and are very methodically working and investing in companies which will benefit even in private domain out of these sectors.
What's the next leg? What's the next leg which we could see a glimpse of in this budget maybe, or outside the budget as you mentioned? Because we've seen that import substitution or lack of reducing the dependence on imported mobile phones, for example, or electric components. What is the next leg?
As I said, that it will be critical minerals, it will be data centers, it will be medical equipment, it will still be other components of electronics, it will be some parts of garments, textiles, wherever we are still kind of in a minor way still dependent, or these are items which could also be exported in a big manner. So the list kind of is long. I'm sure all of it will not get and cannot get covered only on the budget. But what we are seeing, even for last few years, there is a systematic save all of this foreign exchange, which we are actually paying to foreign shipping companies. Now, as a direction, I am very clear. Now, whether it comes in this budget or it comes during the year or it comes next year, but given the intent of the government, some of these long pending large sectors where we are spending a lot of money by way of forex foreign exchange will get government attention, and in due course of time this will get addressed. So the important thing for today's discussion is not whether which sector will get fill up. The important thing is what we have to watch for the government intent and the direction about strategic autonomy as the overall subject, and what the government is showing as an intent in this budget.
Madhu, important points that you're raising, but I just want to take that forward a little bit and to say that you've already identified 8 sectors, is what I heard, right? Where this will play out, this strategic independence. I'm wondering about what your anticipation of requirement for creation of capacity is, and whether significant capex needs to be spent, and whether opportunities will present themselves, therefore, in the funding of those opportunities as well.
Yeah, it is already happening. That's the point which I'm trying to make. That there is, like what you saw, electronic sector is the best example of how the government and the private sector has worked together to create a large industry which was kind of completely non-existent even 10 years back. And so many beautiful companies came across, and billions of dollars of market cap got created. All I'm saying is that that will get replicated in many more new sectors. And today is the day to watch the intent of the government towards it, rather than rather I would not be very excited only about a specific event, but a specific sector what they do. But I would be watching for the overall strategic event intent of the government.
Mr. Kela, just stay on, because we also have Amitabh Chaudhary of ASSOCHAM with us, of course, and needs no introduction. But I just thought it'll be lovely to get a set of one answer from him and get your opinion on him on that point as well. Mr. Chaudhary, great having you. Thank you so much for taking the time out and being with us. But we're talking to Mr. Madhusudan Kela as we just before we came to you, and he was making the point of Atmanirbharta, and he was making a point of how borrowing costs, if they come off, will be a big tailwind for the next 12 to 24 months. I wonder if you believe this budget has the opportunity to make a difference to the borrowing costs in a meaningful way.
Well, I think the Reserve Bank of India has done quite a bit over the last 12 months in terms of bringing the overall borrowing costs down for the economy. Given where the inflation is, given the targeting which RBI has in mind in terms of inflation, and how does it link to the overall interest costs in the economy, I don't think there is more scope left to bring the interest costs down. I think at these levels, with the cost of capital also coming down meaningfully for Indian corporates and Indian economy, I think the push has to be what I heard towards the end of what Mr. Kela was saying, that the push has to be directionally where the government wants to push the reforms, push investments, and ensure that India starts emerging as a real competition globally in some very specific sectors. We are not competitive enough in many sectors globally, and what the government can do to help the economy emerge in some of the other areas would be very, very important directionally, at least from this budget. So I'm looking forward to actually government pointing us in that direction. And obviously there are a lot of commentary which is happening in the markets and by various commentators, including Mr. Kela, about specific sectors where they expect government to push the agenda.
And just, Mr. Kela, one last response from you to that point, and then we, of course, thank you and continue a conversation with Mr. Chaudhary. But Mr. Kela, you want to respond to that?
No, I think what Amitabh is saying is absolutely in the right direction, and we are making a similar point that the government intent has been to reduce the cost of funding. What I was referring was to look at the absolute borrowing which they will do only from the budget point of view, and that is only the today's event. That so I was just only specific specifically referring to the number. But on this overall subject of, Neeraj, on the overall subject of strategic autonomy, the government has made a lot of moves in the last few years, and one would expect them to continue to make moves, and the budget should only be an event in that direction, to give direction to the overall entrepreneurial class, that they are really serious about it, which they have been. So I would just be watching for a larger intent rather than it being an event.
Madhu, thanks so much on that note for joining us, for speaking to us this morning. Absolute pleasure as always. Mr. Chaudhary, I want to double down on the point that you were making, and also to ask you about what you think trajectory of lending is going to be in the country, because we've been focused on, or rather the government has been focused on bolstering consumption, and we're wondering what the thrust will be. Because so much has already been done, is it possible that a shift might take place to focus more on capex in the relatively near term? And what does that mean for banking sector growth and lending rates, or rather lending growth heading into FY27?
So as Madhusudan said, directionally, obviously we are looking for, from the government, some indication on what the capex growth would be. People are expecting it to be a double-digit number. But what the government can do to push capex growth even higher than where it is today is something we're looking forward to hear, from the finance minister. Now, if the capex growth does come through, if some of the reforms which they talk about do push that capex growth, is good news for the banking sector, because ultimately that will lead to higher credit growth. Now, people are already projecting 15 to 17% credit growth, obviously looking at both the wholesale and the retail side. But it also then has to be followed with deposit growth, and there obviously has been some commentary around what the government can do to allow the bank to continue to grow their deposits at a certain pace, because at the end of the day, credit and deposit growth also has to converge. So from my perspective, yes, we have to push the economy, GDP at a certain level. It has to be integrated with a certain amount of capex growth. Credit growth will follow, but then the credit growth is not possible on a sustained basis if deposit growth is not there. So all of them are linked.
I also want to ask you, Mr. Chaudhary, about the smaller entities, right? And the health of those smaller entities, especially those that are facing the external side. Is there a requirement to provide a little bit of a room, either through a moratorium or certain other options by the government, to help them tide over what is clearly a difficult time?
Well, government has already done some, in the sense that they have provided some incentives, especially for companies who are suffering because of some of the tariffs which have been imposed by US. Government is also working very hard to ensure that they can sign free trade agreements with as many regions, countries as possible at a very, very fast pace. I think there is a clear request from the industry at large that the government, their guarantee schemes have been very successful, that whether government can enhance some of those guarantee schemes, not only to support the industries or MSMEs which have suffered as a result of some of these geopolitical issues, but also MSMEs at large. How can we grow that sector in a meaningful way, and what role government can play to actually support those MSMEs? So government has obviously pushed various finance platforms. Government has been pushing MSMEs in general, giving them all kinds of incentives. They've expanded the definition of SMEs. But my view is one another area where a lot more can be done, and has been done successfully, is just building up on what already is in place, is to come up with guarantee schemes which can support these MSMEs in a meaningful manner in various sectors of the economy. Right now, the focus seems to be sectoral reforms where India can emerge as important player globally. I think MSMEs will have an important role to play. So some of these identified sectors, I think MSMEs do need to be supported. So I'm hoping that directionally government will do something in that area.
Amitabh, hi, Tamanna here, and we had this conversation about budget when we spoke in Davos as well. The thought is that the government should stick to its fiscal targets. But is it time to maybe give them a little room for capex to come in? Would you say that growth needs to take precedence?
I think, all of them are important. Fiscal consolidation is important. Again, maintaining certain policies in terms of taxes is very, very important, because, directionally you're giving a very clear signal to the investors at large that you can expect things to be steady and moving in a certain direction, as it has been enumerated by the finance ministers many times over the last couple of years. So you don't want, or suddenly a change because we were pushing something. Give government credit. I mean, we didn't have to wait for the budget. They have done a lot already. And that's why expectations from the budget are low, because in terms of opening up and in terms of pushing various reforms, in terms of giving, the GST benefits, in terms of some of the taxation benefits, they've done a lot already. So my view is that directionally government should continue to consolidate, but at the same time, the size of the budget is very large. Can they push capex? Can they push, give some incentives in certain areas where government is actually not spending, but will kind of, give some revenue away over a period of time? Is still possible. So I think both are possible. We don't have to sacrifice one to achieve something else.
Amitabh, thank you so much for speaking with us, and we hope to hear from you once the budget is out as well, and what your view is on what Finance Minister says. We're going to take a very short break, but I just want to give a sense of what's happening in the markets right now. Look at the IFCI stock. Now, this company has about a 4% stake in NSE. That could be one of the reasons why you're seeing IFCI up and about today. Data patterns, Jupiter wagons. We've been talking about the theme, the budget theme. NTPC Green Energy could be another one in those budget themes. Swiggy is up and about. Maybe they're hoping for some boost to consumption. But really, the losing side is where the news is. MCX is 15% down right now. One of its worst single-day falls since COVID, as our ticker is telling us. Hindustan Copper crashed 14.5%. You're seeing Hind Zinc, Nalco, all of them, Muthoot Finance, even as gold prices are continuing to tumble. So a lot that we need to unpack on the markets as well, but we're taking a very short break. On the other side, the big names continue. Stay tuned.
Growth agenda.
Back with India Market Open ahead of the budget. What about an hour and 15 minutes left, and two experts with us joining in. Two important market voices: Manish Sonthalia, Director and Chief Investment Officer, MK Investment Managers; Ajay Srivastava, MD of Dimensions Corporate Finance Services. Gentlemen, both of you, thank you for joining in. Thanks for your patience. It's just that kind of a day wherein conversations tend to spill over a little bit. But I'm just trying to understand, Manish, as we head into this budget, are you constructive, or do you fear that no big bang announcements might lead to a market sell-off?
No, exactly. as like any other budget, a lot of expectations built into the run up to the budget. But if you look at it practically, what are the things that they can do given the situation that we are in? So, not too much of expectations going into the budget. Markets will watch out very carefully as regards any alleviation of the problems of STCG, LTCG, and STT. If that comes through, many of the things regarding the problems in the stock market could be taken care of. But otherwise, if it's run of the mill, like you have a 4.2% fiscal deficit, nominal GDP growth of 10.5%, a gross borrowing number is the key number to be watched out for. 16.5 lakh crores and beyond is going to be taken very negatively, and anything less than that could be taken positively. Capital expenditure, 12.5 lakh crores, defense, 7.5 lakh crores. These are all known numbers. Nothing is going to surprise very positively. I think the only thing which could surprise very positively is some consideration on capital gains tax from a foreign outflow perspective, because these are the guys who are selling. And if this doesn't come about, the trajectory on the downside could continue. Of course, there's high degree of margin of safety as far as the valuations of the market currently are concerned. I'm not too negative, but you could see a sell-off if these things don't come.
Weigh in on that. Is your mood buoyant? Are you positive or are you cautiously optimistic? What's the view?
At around 25,000.
No, I'm talking about Ajay. Ajay, you want to weigh in on that? Is your mood buoyant? Are you optimistic? Cautiously optimistic? What's the view?
Well, our mood is optimistic because I think the government has done a lot in the last 1 year. Unfortunately, it has not worked on one principle. Biggest one would be the FDI, FPI, because that's a critical piece for Indian economy. That's not worked. And I think that's where we are looking at the budget and saying, is there going to be structural changes? Is there going to be difference in approach to this fact? That's one. So FDI and FPI reversal steps, that's a one big priority we are seeing. And we're optimistic that something will be done for that. And of course, the next one is we are optimistic about the change in PSU banks. I think the approach to PSU banks may change. I don't think they'll privatize, but I think the approach will change, and that could be very constructive for both the index and the market, as well as for the Indian lenders and the people, because I think having competition in the banking industry with good quality PSU banks now modernizing, that would do wonders. So I think two places, FDI, FPI, and PSU banks, I think there are two big pillars. I think we are very optimistic that you could see good steps coming through, and we should positive outlook for that one.
Okay, you're seeing pictures of the finance minister outside the steps of parliament, where she will now proceed, and then the budget session, which has begun, will see the whole process of Finance Minister Nirmala Sitharaman presenting the budget. You can see the chief economic advisor there on the top step as well, and the entire team that has gone through this process of presenting the budget this year. Surely not an easy one. I mean, no budget is easy in a nation as complicated as ours. There's always balance to keep, but this one is particularly difficult. I'm wondering, Manish, I'm going to come to you first on this. If there is no long-term capital gains relief, and it may not be there, if there is no tinkering at all with tax, but more of a broad messaging on where the country is going, would that be seen as a negative by the market, or would there be a sigh of relief that at least nothing has been done to disturb the status quo?
No, I think if, it's not going to be anything big bang, then I think the trajectory of the markets would be what it is today, negative. So you could see a continuation of a sell-off from tomorrow. Of course, valuation comfort is absolutely there. The negative runoff could be there for a day or two, and then people will weigh in the positives and negatives accordingly. But I think the trajectory, a big bang reform could be on the capital gain side. If that is to come about, then FIIs will feel a sigh of relief. You could have the FII flows get reversed.
Rahul Arora, CEO of Ashika Institutional Equities, also joining us this morning. Rahul, very good morning to you, and thanks so much for taking the time. I'm going to start with a non-budget question, though. I'm going to start with a pack of stocks that is toppling like a house of cards, and that is the metal pack. What would you say about what we're seeing right now? Is it really par for the course based on the underlying and the way that it's moved? Or do you think that there's more at play here? It could settle, it could go up again?
Morning, Alex. Thank you for having me on the show. I think the short, humorous answer to your question would be either get an oxygen cylinder or sit on the Ferrari Rosso in Abu Dhabi. I think if you can manage either of those, you're going to manage this. But I think, what's happened in the metal sector obviously is a bit of an extreme. You could argue that the run-up itself was a bit extreme. But typically, as you see in stock prices as well, these things tend to stabilize after the kind of move that has happened. Of course, the news flow around the new Fed, etc., have not aided in terms of sentiment. But I think the kind of run up that had happened, I think it's just par for the course. Would I be a buyer in these stocks? No point catching a falling knife going into the budget. Let's see what the reactions post the budget are. But I think we could be close to the end of what you have seen, both on the underlying as well as from a stock perspective.
Okay, and I'll take a question to Ajay, of course, but Rahul Arora, congratulations on your new role as well. But Ajay Srivastava, coming on that, I mean, just the volatility that we're seeing across asset classes, but particularly metals, right? And that has a big impact on, well, household savings if you've not sold your family silver, but on the stocks as well. How do